Hello everyone, what's going on? Few important updates are coming from NIO Shen. Recently, Envo President Shen Fei confirmed that Envo stores traffic has surged over the past 2 days. The Envo L90 capacity has increased beyond expectations, reaching 15K units in October. Starting this week, Envo L90 deliveries will be accelerated to ensure timely deliveries. I believe all these things are happening is because of the new ES8. ES8 is clearly attracting new customers, but it also pulling in buyers who were on the fence and now making the jump to the L90. This duo is helping Envo and Neo capture a wider range of customers in the 180,000 to 450,000 price range, showing they can meet diverse needs and budgets. Here, the market is taking notice. Envo's production capacity has ramped up beyond expectations, with plans to hit 15,000 units in October alone. This is a huge win as increased production means they can meet demands and accelerate deliveries. This is critical for any car company, but especially for an EV maker in a competitive market. Timely deliveries keep customers happy and build brand trust. On top of this, customers who have recently placed orders can still take advantage of the purchase tax exemption for the year, saving up to 13,000 yuan in the purchase tax. These kind of incentives are a powerful tool to close sales and create a sense of urgency. So the question here is that what does all this mean for NIO investors? NIO is showing that it has a strong product and a growing market and the ability to scale up production to meet demands. It also shows that Envo is not just riding on the coattails of their parent company. They are establishing themselves as a serious contender. The combination of innovative future, increasing production, and strong market demand paints a very positive picture. We are seeing a company that's not just only surviving but thriving. And in the fast paced world of electric vehicle, that kind of momentum is priceless. That is the reason why big institutions are increasing new stock price target on the basis of strong orders. Here, Citigroup raises new stock price target from 8.10 to 8.60 cause strong order numbers for NIO L90 and the ES8 model drive optimism. Potential growth catalyst includes China new energy vehicle market surge and improved production rate. Here, I would say that once company's production rate will improve, then definitely their revenue and margin will also improve. And because of that, big institutions like Citigroup will buy more NIO shares and we will see some good momentum in its stock price. So get ready for it. With that said, thank you so much for being here. See you in next one. Hello everybody. So seems like September month is going to be awesome for NIO investors cause Deutsche Bank analysts estimated that NIO to deliver around 35,000 vehicles this month. This is a massive milestone. It represents a 65% year-over-year increase and 12% jump from the previous month. This kind of growth is a clear indicator of strong market demand and NIO's ability to meet it. This impressive figure isn't just from one brand, it's a collective effort with NIO, Envo and the Firefly brand contributing roughly 15,000, 15,000 and 5,000 units respectively. But the good news doesn't stop there. The new order flow is also soaring. Dealers' feedback suggests that new orders in September surged by an astonishing 67% month over month, reaching an estimated 100,000 units. A huge driver for this growth is a robust demand for the flagship NIO ES8 SUV. The breakdown of these orders is equally encouraging. About 80,000 for the main brand NIO, 15,000 for Envo and 5,000 for the Firefly. What's particularly impressive here is the strength of NIO's multi-brand strategy. While the main brand is pulling in the majority of orders, the new orders are also playing a crucial role. The Envo brand, for example, is facing some growing pains with battery supply shortage in September. However, the company is responding strategically by reallocating batteries to the new L90 SUV, showing a focus on high demand models. This kind of agile management is critical for navigating supply chain challenges and maximizing profits. The best part, what I like here, is that company's management is also not shy about its ambitions. They have set a very aggressive target of delivering 150,000 vehicles in the fourth quarter, which would average out 50,000 deliveries per month based on September numbers. and the strong new order flow. This goal seems well within reach. The momentum is clearly building. The positive data from insurance registration in the first 3 weeks of September also collaborate this trend with a total of 19,110 registration. The numbers show a healthy distribution across all three brands with Onvo and main brand NIO leading the way. So the big question here is that what does all this mean for NIO and its investors? The picture is incredibly positive. NIO is demonstrating that it's not just a niche luxury EV maker, it's a multi-brand ecosystem that can attract a wider range of customers. The record breaking deliveries, the surging new order flow, and a clear and aggressive strategy for the future all point to a company that is firing on all cylinders. In a highly competitive market, NIO is not just keeping up, it's accelerating. And that's a story we can all get behind. So get ready for it. With that said, thank you so much for being here. See you next one. Hello everyone, what's going on? So today we are looking at a crucial piece of NIO's future, the F3 factory. While we often focus on sales and new models, the real engine of growth for any automaker is its production capacity. A recent visit by a media reporter to NIO's newest facility provides a fascinating glimpse into the scale and ambition of this company. Just a few days ago, a reporter Yi Kai visited NIO F3 factory in Hefei, located in the company's massive NIO park. This isn't just another factory, this is the future. It's located just a few kilometers from NIO's current F2 factory and is purpose built to churn out the next generations of NIO's vehicle, starting with the highly anticipated the all-new ES8. The factory design's single shift capacity is staggering 100,000 units annually. Think about that for a moment. That's a huge number of cars from just one production line. The factory is already working around the clock with a full array of vehicle parked in the employees' parking lot. This isn't a facility that's waiting to be fully ready. It's already ramping up production to meet a surge in the demand. This is a clear sign that NIO is not only building cars for the future, but is actively accelerating its output right now. They have even had a supplier representative for the older F2 factory transfer over to support F3, which shows the commitment to scaling up and ensure a smooth transition. Now, building a facility of this scale is a monumental task and it's not without its growing pain. The reporter noted some ongoing construction and a temporary sign at the entrance. There was even a brief 4-day disruption in the parts supply recently. But from a finance and investment perspective, these aren't red flags. They are badge of honors. It shows that NIO is pushing ahead and tackling the inevitable challenge of massive multi-billion-dollar project. The fact that NIO is willing to start production and work through these issues in the real time is a testament to their speed and determination. This is the kind of aggressive forward thinking strategy you want to see from a company in hyper competitive market like this. All these things mean that NIO is not only designing and selling great cars but is also building the infrastructure to become a global production powerhouse. The F3 factory is a tangible asset that directly addresses one of the biggest bottleneck for any growing automaker, manufacturing capacity. By expanding its production footprint, NIO is laying the foundation for significant future sales growth, solidifying its market position, and proving to investors that it has a clean path to scale. Here, I would say that in the fast-paced world of electric vehicle, building a state-of-art factory and getting it operational is a huge win for the company and its investors.